This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC on Wednesday trimmed its forecast for growth in oil supply from the United States and other producers outside the wider OPEC Plus group this year and said it expected lower capital spending following a decline in oil prices. Supply from countries outside the Declaration of Cooperation, the formal name for OPEC Plus, will rise by about 800,000 barrels per day in 2025, OPEC said in a monthly report, down from last month's forecast of 900,000 barrels of oil per day. A slowdown in supply growth outside OPEC Plus would make it easier for OPEC Plus to balance the market. Rapid growth from U.S. shale and from other countries has weighed on prices in recent years.
Oil prices fell over $1 during trade on Thursday on expectations of a potential U.S.-Iran nuclear deal, while a surprise build in U.S. crude oil inventories last week heightened investor concerns about oversupply. Brent crude futures fell $1.49, or 2.3%, to $64.60 a barrel by 0405 GMT. U.S. West Texas Intermediate crude futures slid $1.46, or 2.3%, to $61.69. Iran is willing to agree to a deal with the U.S. in exchange for the lifting of economic sanctions, an Iranian official told NBC News in an interview published on Wednesday.
Moving on to the top news in the energy sector.
Asia's imports of key refined fuels such as gasoline and diesel fell to the lowest in 4 years in April, driven by a combination of refinery maintenance and weaker demand in the top importing region. Total imports of light and middle distillates were 166.37 million barrels in April, down from 195.54 million in March and the weakest since April 2020, according to data compiled by commodity analysts Kepler. India, the region's top fuel exporter, saw exports of light and middle distillates slump to a 30-month low of 29.2 million barrels in April, down from 42.66 million in March, according to Kepler.
U.S. crude stocks rose as the nation imported more oil, while gasoline and distillate inventories fell last week ahead of summer driving season, the Energy Information Administration said on Wednesday. Crude inventories rose by 3.5 million barrels to 441.8 million barrels in the week ended May 9, the EIA said, compared with analysts' expectations in a Reuters poll for a 1.1 million barrel draw. Net U.S. crude imports rose last week by 422,000 barrels per day, the EIA said. Brent and U.S. West Texas Intermediate crude futures extended losses following the data, and both contracts fell around 0.7% at 10:46 a.m. Eastern Daylight Saving Time, 14:46 GMT. Next, we have the top news in metal markets. Prices of most base metals in London edged lower on Thursday as the temporary U.S.-China tariff truce prompted caution, with concerns about a potential global recession affecting metals demand. Benchmark copper on the London Metal Exchange fell 1% from Wednesday's close to $9,509 a metric ton at 0704 GMT. That was 1.6% lower than last session's peak of $9,664, the highest since April 2. On Wednesday, China paused some non-tariff measures taken in April against several U.S. entities, 17 on its unreliable entity list and 28 on its export control list, the Commerce Ministry said.
Iron ore futures held near a 5-week high on Thursday, boosted by improved demand outlook from the Sino-US trade truce, although weaker credit data from China limited gains. The most traded September iron ore contract on China's Dalian commodity exchange was up 0.48% at 731 yuan and 50 fen, $101.40, a metric ton, as of 0302 GMT. Earlier in the day, the contract hit the highest point since April 7 at 738 yuan and 50 fen. The benchmark June iron ore on the Singapore exchange, however, was down 0.77% at $101.05 a ton.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures dropped on Thursday, dragged down by weakness in vegetable oils on the Chicago and Dalian commodity exchanges after 4 consecutive sessions of gains, while market participants awaited the export data. The benchmark palm oil contract for July delivery on the Bursa Malaysia Derivatives Exchange lost 48 ringgit, or 1.22%, to 3,875 ringgit, $904.74, a metric ton by the midday break. Today, CPO futures are taking a break after the recent rally. While waiting for the 15-day export data to provide new lead, a Kuala Lumpur-based trader said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.